Saving your money is a terrible idea. You lose value over time due to inflation, which has been hitting record highs over the past year. So the alternative is to invest. But so many people are warning that the stock market is going to crash soon. So you might think about cryptocurrencies, but those markets are even more volatile than the stock market. What if there was a way to get a high rate of return on your spare cash that had little risk and no volatility? Now you're thinking, oh, well, that's impossible. But if you watch this video all the way through, you're going to learn how you can start earning 8.88% interest on your cash for very low to no cost. Now, if that sounds good, make sure to like this video to increase its interest in the YouTube algorithm. While you're down there, please also make sure to subscribe and ring the bell to be notified when new videos come out every Friday. They'll help you live a life you love through personal finance and self-improvement. If you want to earn high yields on your saved money, you're probably thinking about high yield savings accounts like Ally Bank, which offers a 0.5% interest rate on your cash. There are other options available on the market, but even the highest of them tend to top out around 0.7%. Saving your money even at 0.7% means that you're going to lose value over time due to inflation. This is the decrease in the purchasing power of your money as it becomes less scarce or less rare. In May of 2021, over 40% of all US dollars had been printed within the past calendar year. And this of course contributed to the massive spikes in the inflation rate. Even in normal years, the US Federal Reserve aims to go for 2 to 3% inflation. This means that your money has to grow at a higher rate than this in order for you to not lose value over time. If you invest in stocks, you can get an 8 to 10% return per year based on historical averages. But if you need cash, you're going to have to sell your assets, and this is going to have tax implications in many circumstances. Plus, markets just go down sometimes. So if you're using a tax advantage investment account like a Roth IRA as a savings account, that's just not going to work for you. Now, crypto markets are even more volatile. Plus, it can be even harder to exchange those assets for cash. And this is because you'll have things like transferring between wallets, all the different gas fees, whether or not you can withdraw cash on this platform. Is it linked to your bank? Do you have your ID verified? So what I'm promising is the high returns of stocks and crypto, but with the stability of cash. How can we do it? The answer is simple: Celsius. This is one of the main crypto lending platforms. These platforms reward users for holding their crypto assets by giving them an interest rate. And this is the same thing that banks do. You get interest, although a lot less, for letting somebody else hold your money. If you want to earn 8.88% interest off of your cash, we're going to have to talk about stablecoins. Stablecoins are crypto assets which are pegged to or track the value of an underlying asset. For instance, the Paxos or Pax Gold token tracks the value of gold because every Pax token is backed by 1 ounce of gold. This is very similar to how index funds work in the traditional stock market. These track the value of an asset by holding that asset in the fund's management. Most famously, there's indexes which track the S&P 500, or there's even a bunch that track the value of gold for comparison's sake. Stablecoins more often are going to mean crypto assets that are pegged to the US dollar. The most popular two out there right now are most likely USDC or US dollar coin and Tether. Of course, there's a lot of news out there as to whether or not Tether actually has the assets to properly back every Tether coin in circulation. In that case, I'd stay away from Tether, just in case the rug gets pulled. Now, the US government is actually considering making their own stablecoin, a CBDC or central bank digital currency. This is probably a reason why they're looking to more heavily regulate stablecoins and the existing stablecoin market. In any case, to start earning 8.88% interest on your spare cash, you're only going to need 2 things: Celsius and another app to buy cryptocurrency at low or no fees like Gemini or Coinbase. We're going to start with the Gemini case. Download Gemini, link your bank account, and then confirm your ID on the app. The verification may take a couple of days, but you can get your Celsius account set up in the meantime. You'll also want to verify your ID over there on Celsius. Transfer dollars into Gemini and then convert those into Gemini dollars. This is Gemini's stablecoin, and it's also pegged to the US dollar. The main benefit of using Gemini and its stablecoin is that its platform has no limits as to the amount of money or the amount of times that you can transfer or convert Gemini dollars. Then send your Gemini dollars into your Celsius wallet, and please make sure it's the Gemini dollars wallet, otherwise your money's going to disappear. Once your funds appear in Celsius, that's it. Now you're going to be earning 8.88% interest off of your cash. That is either until you take the money out or the rates get adjusted. Celsius also has the benefit of unlimited withdrawals, so you can technically use this system as a super high yield savings account. The main drawback though is that there are of course multiple steps from going from your stablecoin assets to actual cash. That's why I look at this process more so as a stable investment. That way I can decrease the volatility of my overall investment portfolio. Now let's look at another case, and this is going to be using Coinbase since you're more likely to already have this app. If not, make an account and again verify your ID. Then link in your bank account. You can deposit cash into Coinbase and transfer those into stablecoins, or you can just buy them outright for no fee. When you go to transfer your funds into Celsius, you're going to have to pay the gas fee on this transfer. Depending on how much you're selling, you can get this gas fee back rather quickly because Celsius offers weekly compounding interest. This means that you're going to get your interest payment every Monday morning, and this interest is also going to start earning you even more interest. Compound interest, according to Einstein, is the most powerful force in the universe. It's also the secret to becoming rich and wealthy, and this is because compound interest is like a snowball going down a hill. It gets bigger as it goes, and then it starts growing even faster. So now you're earning 8.88% interest off of your cash with no volatility. If you want to earn even more when you sign up, you can use my referral in the description below. This is going to earn you $50 worth of Bitcoin if you make an account and transfer in $400 or more of any crypto asset into your Celsius account. After you have it in your balance for at least 30 days, both of us are going to receive $50 worth of free Bitcoin. That's not bad. As of this recording, you can also use the Stable50 promo code. Now that's going to get you another $50 worth of free Bitcoin when you transfer in $200 or more worth of USDC or Tether. Of course, I'd again recommend against buying Tether. The simplest way to take advantage of this promo is going to be to buy USDC on Coinbase and then just transfer it into Celsius. You'll have the gas fees, but you're going to earn that back in interest over time. Plus, you're going to get $50 worth of Bitcoin. Even cooler is that if you leave that Bitcoin in Celsius, you're going to start earning 6.2% interest on that as well. So you're thinking, oh man, this 8.88% interest thing sounds pretty cool. But this guy just said that banks max out at 0.7%. How's the Celsius thing going to earn me 12.5 times that? Well, I'm glad you asked that, because that brings us to the review portion. Let me say, this video is not sponsored by Celsius, but I am a very big supporter of their platform and have been using it for a while. Plus, they technically pay me because I'm using it. I'm also going to be talking about Celsius from the perspective of a US-based user. Please note that some features are going to be different if you're international. Mainly, international users can actually earn higher interest rates if they choose to earn that interest in CEL tokens rather than in kind of the same crypto asset. Celsius has two main features, borrowing and earning. We've been talking about the earn portion, which you now know is a really cool way to start earning some money off of your crypto assets. In fact, Celsius offers some of the highest interest rates on some of the most popular coins like Bitcoin and Ethereum, especially as compared to their primary competitors BlockFi and Nexo. The highest interest rate that you can currently get is 13.99% for SNX or the Synthetics token. The only time you're going to run into limitations with this earn feature is if you have over 100 Ethereum or 1 Bitcoin. Your interest rate for tokens held beyond that amount is going to decrease, but the overwhelming majority of people aren't going to run into that problem. But how is Celsius able to offer these incredibly high interest rates? How are they even making money? Mainly, that's going to be from the borrow feature. There's a reason why these apps are called crypto lending platforms. That's because they make money from loans. You can use your crypto assets as collateral for loans through Celsius. They approve most people for these loans, which start as low as $100 for stablecoins. And that's because they're going to need 2, 3, even 4 times that loan's value from you as collateral. The more you give, and thus the lower your loan to value ratio, the less interest you're going to have to pay on that loan. Also of interest, if you want a loan in cash, that's going to be a minimum $15,000 loan. You can decrease your interest rate by paying those interest payments in the CEL token, Celsius's token. Currently, loan terms range from 6 months to 3 years. And you must apply for a loan through the app because, for whatever reason, the desktop version just kind of sucks. So Celsius makes money by collecting interest on loan payments and liquidating positions to reclaim some capital, like the last Bitcoin crash. And this is all very similar to traditional banks. The primary difference is that it seems like Celsius actually doesn't want to have to go in there and liquidate people's positions, at least based on their social media presence. They also make money by providing liquidity to large institutional investors. If you want to learn more about Celsius or get updates on the platform, you can tune into weekly AMAs or Ask Alex Machenko Anythings. These webinars provide weekly updates and field audience questions. I think these are a great way to build community, provide transparency, and interact with consumers. It's a practice that's going throughout the crypto space and likely something we might see adopted throughout other industries as consumers increasingly want more authenticity. Beyond earning and borrowing, Celsius has some other features. One is CellPay, which is basically just the ability to send and receive crypto payments. The app wouldn't work without this because otherwise you wouldn't be able to transfer your funds, so it seems kind of weird to advertise it as a specific feature. At the very least, again, you do get unlimited withdrawals at no cost. Another feature that sounds great but isn't out yet is the Celsius credit card. This is likely to compete with BlockFi's Bitcoin reward credit card. I think Celsius's credit card is going to unlock even better potential for users to use Celsius like it's a high-yield savings account. You'll be able to pay your balances back with cash, rewards, or stablecoins. If you have stablecoins in your account and you're earning that 8.88% interest rate, you could basically treat the Celsius credit card like it's a really high-yield checkings account. The only issue with the strategy, of course, is that might end up hurting your credit utilization, and you can watch a pretty cool video about that. We'll have to wait and see once we get more details on the card when it comes out. Another feature currently in beta is zero-cost swaps. Some users have access to this, but not me. While they say this is zero cost, you're limited to specific trading pairs, and I assume they're going to be taking a little bit of profit off the top by filling your order just slightly over market rate. This is basically what most other crypto brokerages do anyway. But if Celsius is able to offer these swaps at a lower price than Coinbase, that is going to be great news for getting more people to adopt this app and to start making even more money. I'd consider rolling some of my stablecoin interest into swappable pairs. That way, I'll have a more diversified exposure to the wider crypto market. Now make sure to like this video if you found it helpful and you wanted to get broader exposure to the YouTube algorithm. Please also subscribe and ring the bell to be notified when new videos come out every Friday. Then click the video on screen to watch another that you're going to enjoy. And then please add some music, a really high interest extra savings account or whatever else it is that you love to your day.
Add some music, just add some music.